out of 100, 200 and odd people, um, only a few people are on. Um, put that in there. Um, yeah, exactly. 100%. 100%. Um, yeah, I know. I get with you. You work um nights as well, so totally understand that. Okay. So first things first. Um, let's do two now. What? This is on Ethereum. So that's on the 30. Okay. So first things first, when it comes to the way that I personally trade, let me get this up as well. So I can see if anyone does put anything in the chat. Um, Look at that, it's like a mountain. All right, cool. So the first thing, obviously, we want to be checking higher time frames, okay? So again, as you know, I have my lines marked out, right? I always have my lines marked out, but I'm also checking higher time frames, okay? Now, when it comes to, let's say, for example, let me move that out of the way. Let me go to, this isn't going to be the right one to use. Sorry, guys. No, where's it gone? Oh, alrighty. Okay, so for me, I'm checking different time frames. Okay, I'm checking the hour. I'll look at the 4 hour. As you guys know, I will look and I will see areas of interest. Okay, when it comes to trading this strategy, I look at areas that have tried to been like rejection areas. They've tried to break through. They've come through multiple times. So let's say, for example, I'm looking at the 1 hour chart, right? It all starts, it all starts like this anyway, right? It all starts like this. So let's hide, let's hide, and let's keep the rest. So this is all I'm looking at the start, okay? Not looking at the lines. I'm not looking at anything else. I'm looking at areas of interest. Okay. Where has market been multiple times? Where has it come to multiple times, right? So for example, you can see here, it bounced off this zone here, came back, dropped, came back, dropped, came back, went up, came back down, dropped. You see? So you could look in these certain zones right here and see that market has been here many, many times, right? But obviously, this hasn't long happened, right? So I'll go back further. I will look at certain areas and look, you see, right? Market's been here again multiple times. So then what I then start to do is I look at this zone and I see how many times it's rejected. You see how many times it's rejected, how many times it's broke through, how many times it's come back. Okay, so this area, let's have a look at this area. Okay, this zone right here, which is actually where we are right now. This is the area I'm expecting it to go to. Okay, now why? Because again, it's an area of interest. So I look at that, okay, so I know where market wants to go. Okay, I see it, I see where it's looking like it's coming towards. Like before, I said to you guys, it's going to 47, right? And what did it do? It went and hit 47. Why? Because of this zone round here. It's a very busy, busy zone. You can see it's come up, it's been here again, it's been here again, it's been here again, it's been here again, it's been here again. You see? So once I know that, I know an area, okay, and then I go and do my lines, I know that market is going to come through these lines. I know it. Okay, you know, market will always repeat itself. So like when it gets up here, you can see, right? There's massive areas of interest in this area. It becomes a zone, okay? So what you do is you mark out your zone of interest, okay? So you can see here and here is definitely, I would say from here to here actually, from here to here is a zone of interest. And then look, it kind of correlates with these blocks, right? So you can see now that isn't what I was supposed to do. Right? So this here is, you could call it a zone, right? You can make it a wider zone or you can break it down into smaller zones. Hence, look, that's a zone, right? But at the moment, that's just the zone I'm going to go for, right? So from here to here, okay? So you can see inside that zone, it's come up, it's come down, it's gone up, it's gone down, it's shot up, come down, it's come down, it's come back up. You see? Because look, yes, it broke through and then it dropped, came back up, came down, came back up, came down, came back up into the zone, came down, came back up into the zone, went up, came back down into the zone. You see? Do you see what I see, right? Came up, came back down into the zone, went up, came back down into the zone, and then it sunk. Yeah. So I know here is one zone of interest. Okay. Now, obviously, using this in conjunction with the lines, right, as well, also helps me to be able to scout. Obviously, having these scanners gives me even more, I would say, confidence as well. Not confidence, but yeah, confidence in the market to use this strategy. If it wasn't for these scanners, scanners like this and the system that we're using, I probably wouldn't have found or wouldn't be using this type of strategy, if that makes sense. I don't know, but all I'm saying is like they help massively, right? Because of what Killshot does in itself, how it marks out all of these, right? Allows me to be able to see more. It allows me to be able to see it clearly. Okay. So I look for areas of interest. That's the first thing that I do. Okay. That's the most important part of what I do. So see, we're not far from it. We're not far from that zone. But then what I'm also doing in that zone is I'm looking for, I will mark out my chart and I'll look for my breakout areas, right? So I have the 3 minute. Sorry, let me just make this a bit better. Okay, cool. So you know me, I like to trade the 3 minute, but having the 15 and the hour or the 30 up also is it helps a lot as well, right? So what I'm doing when it comes to, how I mark out my chart, I mark out my lines, and I'm marking the time frame as well, right? I could simply just go and put a bunch of lines on the page, but I'm marking out the time frame to see the strength, obviously, of that particular line, right? Now, I'm also using the 1 minute. I trade the 3 minute, and I'm using the 1 minute as my guide also. Okay, so when you are trading, most people look at this little section here. They don't really look at these candles behind. They're not really looking, okay? But what you also need to be paying attention to is, for example, when we got into our trades before, we was waiting for the breaks, okay? We was waiting for the breakout of each of these little zones. Just move that over. Now, okay. So I'm using this as my guide. If it breaks through one of these, I'm getting in for a trade. But I'm also looking at the previous candles. I'm not just looking at that one candle that I'm at. I'm looking at the previous candles. Okay, because you need to see it has to break. It's not just about breaking the next candle. It becomes a zone, right? Because look, and this is how you can determine how far market might pull back or how far market, wants to go. So for example, right, you can see it comes up, comes back down. I need to give you a better example. Yeah, so for example, this one here, right, is pretty much neck and neck with that candle there. Can you see? This candle here is pretty much neck and neck with this candle here, right? So it's not just about breaking the next candle to it. It's about breaking the opposite candles to it as well. They will also give you a guide as to what market's intending to do, because you might look at it. Look, can you see here? These two here, these two here, neck and neck, right? They came down, came up, came down, came back up, and then went down. It kind of did the same, but opposite to what this did. These two candles went up, came back down. These two candles pushed back down, right? Am I making sense so far, guys? So when you see these two candles here, and then you see this candle here, you can see it's pushing down, it's pushing down, it's pushing down. Stop. Right? It's pushing down, it's pushing down, it's pushing down. You see? Look, neck and neck. Neck and neck. 1, 2, 3, 4, 5. Neck and neck. Can you see? Yeah? Am I making sense? Please tell me I've still got you. Am I making sense, right? Neck and neck. Come up. Push back down. Stop. Went up. Push back down. Stop. Yes, obviously you've got these lines here as well, right? But what I'm saying is these next candles you want to be paying attention to. Okay? Because it needs to take over. Look. Neck and neck. Right, smack, bang, neck and neck. Yeah? So look, it came through this candle here. Next one, red. Came down, came through this candle here. And then look, pushed back up. Then came back down. You see? So what I'm trying to say is, yeah? What I'm trying to say, can you save questions until after, right? And then that way I can answer, and then I'm not going to get, I'm not going to miss what I'm trying to say. Does that make sense, guys? Because if you've got a question, write it down. Feel free to ask me at the end, okay? Because then that way I just will not forget what I'm trying to say. Right. So you need to pay attention to these next candles, right? These previous candles, because it's not just trying to break lines, it's trying to break previous candles as well. So they become a zone. It becomes a zone. That's how you figure out your little zones. Okay, cool. I see it's in line with these candles here. What happened before when market was at this current price? It then allows you to understand what market is trying to do. Okay? This is how I know a lot about where market wants to push to. This is one of the reasons I'm very confident as to where market wants to push to. But then I'm also using DeFi as well, watching these lines here, watching these lines here, watching these lines here. All of these correlate to everything that I'm using, okay? So, like for example, I was on a call with Dan the other day, and we were looking at a trade, and I was saying to Dan, literally, look, market's gonna go. Look, this is neck and neck with this candle here. Where this candle closed or finished when market shut is neck and neck with this. Okay, look what happened. It came up and then it dropped, right? So I was on a call with Dan, and we took a trade. I don't know if he took the trade with me or if he was already, I can't remember. But anyway, he took the trade and it dropped, right? But me, I do jokingly panic a lot, right? On the phone with him. I mess around. I am messing around. But I knew that market was going to push up to where I originally took the trade and beyond, because I was looking at the candles in alignment with it. I was looking at what it was trying to do. So therefore, you can see that it becomes a zone that it's trying to break. Okay, so it pulls back. This is why you get a lot of pullbacks along the way as well, because it's not just these lines, it's not just support and resistance that it's trying to break, that it's trying to defeat, that it's trying to beat. It's the candles as well. So when you start to see the pattern of the candles, you will start to be more clear on where you are entering and where you believe that the trade is going to go. This is how as well, like, you can take trades and say it's going to hit, this is TP1, TP2, TP3, right? For example. Yeah, so have I got you so far? Am I making sense so far with how you want to look at these candles, right? So look, you can see, yeah? So look, you can see here, right? This zone here. Let me get a line. Let's say, for example, this zone right here, okay? You can see, look how many times, right? Boom, 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 boom. Here, here, you see? So you can see if you were in a trade right here, look, didn't quite take out this candle here, this wick here. Well, this one, so what did it do? It bounced up, came down, yeah, went up a little bit, created this, and then shot up, right? So you start to understand how market wants to move just using the candles as well. Okay? Here. Is it one here? Right, you can see, look, this one came up to try to break here. Yeah? So as you start to play around with it, you'll start to understand what market's doing. Again, you are trying to break these candles across here. Okay? So always look to your left. Don't ever, ever underestimate the power of these previous candles. Okay? So when we're coming up through these zones, now let's go back to this one. Hang on a minute. Right. Now, I have also these on these time frames, so it allows me to again understand the bigger moves of the market. Sorry, guys, just give me 2 seconds. Sorry, guys, about that. Right, okay. So I'm looking at areas, I'm looking at where market's going to. Okay? And then I use these. As you know, these are my famous lines. I absolutely love them. Um, they help all the sessions that I do to be able to take the trades. Okay? Now, when we got onto our call, what time was it? When we got on the first call, it was 6:30. Is this the right time? It is, isn't it? Yeah. It was about 6:30, weren't it? So from about here. From about here, was it? Was it? Yeah, it's about right. God, why did I just do that? Check that on the other one now. Right, so say about here. About here, right? Which was, where was price at that time? Oh yeah, because it was the afternoon session for 46, weren't it? I'm just trying to work it out. Da, 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 da. Yeah, it was. No, 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 no. Yeah, 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 yeah. Yes, it was here, weren't it? Yeah. Okay, so this was our afternoon session, right? So let's go back to our afternoon session. What time? Sorry, just bear with me. I'm trying to figure it out. Was we down here? Yes, we were, weren't we? We were indeed. Let me look at my history. What time would that have been on the charts? Because it's 3 hours, isn't it? So is it 16? Like, sorry, 16. Living with kids too long. No, that was after the session. That was it, 47. Right, so, okay, cool. Perfecto. Okay, cool. Guys, can you hear me? Yeah? You can still hear me. Right, so this was where we were before the session. Yeah, this is about right. We was coming up to here, weren't we? Before the session. Right, okay, perfect. Yeah. So the reason I want to go back to the exact time, guys, is because I want you to understand what I was looking at that time. Okay. Now, I already saw this area. I already saw that it was an interesting zone and it was one that market is obvious. Look, it almost hit it before the close, right? So I knew that this was an area of interest. I knew that market had to come up here because I already had my TP set for this area anyway. Okay. So I already knew that. Now I was looking at that point, this, I was looking at the 238 EMA. I was looking at what I could see on my chart to indicate that market was going to go to this area. Okay. So I knew before looking to the left, understanding market, understanding where market has been, I knew market was going to come up to this zone. So therefore, I knew that we would be able to utilize my lines, right? I knew it. Regardless of even if I didn't, we'd still be able to utilize the lines anyway. But I want, it's important to know where market's going to go. Okay. It's important to try and know where market's going to go. So when we came to the session, We took our positions. Now, when you're waiting for it to break, obviously you want it to break through the line. Now, you can enter immediately from the break of the line. You can. Now, I will enter immediately from the break of the line. Why? Because I'm looking at this area as well. I can see where market wants to go. Therefore, that gives me confidence to know that when it breaks, I'm taking it. I'm going to take some pips. I'm going to let it do its, I'm going to let it take me out, let it do its thing, and then I'm going to get back in. Okay? Because again, I already know where market wants to go. Are you with me? Am I making sense? Am I like, I don't want to like, yeah, just kind of talk to me in the chat. Tell me, am I making sense? Is this helping or is it not? Is this stuff that you already know? Okay. Okay, cool. This is good, but I need to go sleep as 3:45 a.m. alarm call. Okay, that's fine. That's fine. So, okay, so when market pushes up, now I'm not just using the lines. Remember what I said about the candles, right? I'm also using the candles as my understanding as to where market may come up to and then pull back, right? Remember, yes, we're waiting for it to break out, but remember, it becomes a zone. Remember, it becomes a zone, okay? So you can see it comes up, tries to take out this previous, didn't quite, and then look, dropped. Came up, tried to take out this previous, didn't quite, dropped. Okay, so not only am I using the lines, I'm using the candles as my guide as well. Okay. So these are the things that I'm looking at when I'm taking my trades, when I'm looking to take these breakouts from one zone to another. Okay. So that's why we can take as many trades as possible when we're using this strategy. So you just have to keep an eye on what is here. What is here? Okay, what's here? Now, when we came up, we didn't really have anything there, did we? Apart from here. So look. Now, again, that is why it's important to use the higher time frame, okay, as well, because I don't know why I made that thingy. Okay, so you just work out the area that you're looking at. So that is why I'm always looking at this time frame as well, because look, see, that allows me to see candles here as well. Now, yeah, you're going to get, you see here, came down, dropped down, came back up, tried to take out that previous. So I'm looking at all of this. But when I'm on the session, I can't be, making the charts like this. So that's why I use the 15. I use the hour, I use the 1, and I use the 3, okay? Because I'm looking at it. Now, obviously, I ain't gonna give too much away to TikTok, but it is how I build my business, right? So as you can see, look here, you've got to know where market's been before. It's always gonna have been at, it might look different, but guess what? It's always been at that price. What did it do? What did it do? What did it do? So that is why I look at multiple time frames, guys. I'm not just looking at multiple time frames because I want to look at as many charts as possible. No, I'm using them to my advantage. I'm using them to understand where could market pull back? Where could it bounce off of before it continues up into the direction that I know it's going to go to? You see? So that is why I use multiple time frames. Now, obviously, the hour and the 30-minute and the 15-minute are better, right? But that is why I use all of these different time frames. So I can see where market might potentially bounce from, because it, again, you may think that it's only trying to take out that previous candle right there. But oh no. Oh no, 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 no. It's not. Because remember, right? What is in each candle? Guys, tell me. What is in each candle? Exactly. There's always something in each candle. So therefore, it always goes to one price, comes back, one price comes back, one price comes back. You know, it's up, it's down, it's up, it's down, it's up, it's down. Okay? Because it's always trying to take out something. That's how the market works. It's always trying to take out something. Okay, so when you use the candles to your advantage and you see where market's been, where it pulled back from, it will allow you to understand where market is going to go to. So this is how I use the lines. I understand where market's going to go. I look at the candles. I look at where it previously pulled down. Yes, you're going to pull down from the support and the resistance and stuff like that. Order blocks, there's all different aspects of things that are going to push market one way and push market the other way. And if you pay attention to them, then it allows you to get it more precise. Okay? So that is how I am, well, this is some of the reasons as to why I am quite precise in what I do. Because most people focus on one or two things. I focus on what is going to get me the money, what is going to get me the result. Okay? Does that make sense, guys? Do you feel any way better in using these? Look, as you can see, look, this here came up here. Boom. So you use the support, you use the resistance, you use the previous candles to understand what market did in that area. It allows you to know, and then these candles will become a little zone, right? that you know it's going to pull back to before it goes back up. It's always trying to take out the previous. It's always trying to come and defeat each candle. That's how I look at it, right? That is how I look at the charts. So, gosh, you, oh God. You lost me on how you use the candles. You're going to have to rewatch it, Ron. Okay? You are literally going to have to rewatch it. Because I can't keep repeating it. But I do as much as I possibly can, and I will as much as I possibly can. But the best thing that you could do is rewatch this as well. Okay? So again, remember, know where market's gonna go. Look at the zones. Look at the likelihood of where it's trying to get to. That then becomes your zone, right? That then becomes your zone. Now, inside that zone, it's going to bounce up. It's going to come down. It's going to go up. It's going to come down. But if you look at previous candles, it will help you even more. That's why it's important to know the candles. And you know as well, like when I'm on my MetaTrader as well, I have my candles very, very small, like really small, so I can see all of this on my chart when I'm trading as well. Because I bet most people, when you're trading and you're trading on your phone, sometimes you forget to look up at the chart. Am I right or am I wrong? Tell me if I'm wrong. But do you forget to look up at the chart sometimes because you are looking at your phone? Exactly. So I have my candles very, very small so I can see. Like, again, when I was on the call to you the other day, Dan, and we took that trade, I used my phone as my guide because my candles are small. I was on the call to you and I was looking at the previous candles. And remember, that area became that zone, and I said it's coming back to it. Do you remember? And what did it do? It came straight back to the zone. So you'll get to a point where you'll start to understand it so much that you looking at your phone, you will see it. You will literally see it. Guys, I hope I'm making sense. I really, really do. I genuinely hope I'm making sense in what I'm kind of saying to you. But these are the things that I am using so I know where market's going to go to. Okay? So that is kind of how I'm trading, right? That's how I'm trading. I'm looking at order blocks. I'm also, I do pay attention to fair value gaps. Not as much, but I still do pay attention to them. I pay attention to my lines because my lines they are lines that I'm waiting to break, but they also become a zone that I know market's going up to. But we have to wait for the break, right? We always need to wait for the break to the next level, okay? So look, it came up, it broke. Let's say, for example, these are our zones that we're waiting to break. Came up, it broke, right? We take our trade, yeah? It drops down, then we wait for it to come back up, break the previous candles, break the previous, get back in. Break the previous high, we get back in. Break the previous high, this high, we get back in. Break this high, we get back in. Break this, we get back in. Break this, we get back in. Yeah? Same thing, coming down. Same exact process. Get it? Yeah? Get it? Got it? Good. All right. Okay. Right. Now, did you want to watch an Academy video for this session? Do you also want to watch an Academy video? Tell me what you want to watch. Now, we've got our strategies. Police Academy 4. We've got Supernova. You want DeFi. How do I make my charts look like yours? Well, I have the paid version of TradingView. Oh, the color. Just go to the settings on DeFi and change the colors. You can change the colors on anything. You can just double click anything on the screen and it will give you it will literally it will bring up like a little settings thing and you can just change the color of anything on there. So what are we watching, guys? We've got one person that says DeFi. Come on, put your votes in now. Get your votes in now. Come on, what do you want? Any one of these. If I hear more DeFi, we go DeFi. Come on, get your votes in. Two DeFis. Got two DeFis at the moment, three DeFis, four DeFis. Unfortunately, we've done a lot of Kill Shot, but we will come back to Kill Shot. But we will come back to Kill Shot. All right. DeFi. Italian. Right, so we did DeFi strategy. We're going to do DeFi blueprint, DeFi configurations. We did DeFi strategy last time. So do you want to should we just go for number 3? Oh no, we did overview, didn't we? What did we do last time, guys? Configs.
Alrighty, hello and welcome back to this DeFi strategy tutorial training series. My name is Manny Quinones, and again, I'm blessed, I'm grateful to be able to be here with you and help introduce you and further train you on this DeFi strategy. Now, in this particular training video, we're going to cover DeFi configurations. So DeFi settings give you full control over how the system behaves on your chart. While the core scoring logic will always remain the same, the configuration options will really allow you to adjust the signal sensitivity, the strategy visuals, and the execution preferences to match your trading style. So over this training, you will learn how to modify the band length and the cloud settings, which is for the trend tracker. You will learn how to adjust the candles, the EMAs, and the inputs. You will learn how to toggle the visuals on and off, and you will learn how to be able to choose the different entry and target models to define your stop loss and your TP to match your particular trading style.
Hang on, guys, don't we already know how to do this part? Talk to me. Don't we already know how to do this part? Like, we've got our settings, like, done. Do you agree or not? Okay, yeah, same. When we did it last time, did we do the overview or the strategy? Tell me if you want to go on number 2 or number 4. I wasn't on the call last time. Could someone message me on WhatsApp about the settings? And I'm fine to skip. Andrew, the settings are literally inside the education group. Like we've put together a little a screen recording of how to have the settings set. And also, I recorded the last session where we went over the thingy. Okay, let's do 4.
Hello and welcome back to this DeFi strategy tutorial training series. My name is Manny Quinones, and I'm very excited that you've made it this far. It shows your commitment and your willingness to be able to learn your strategy, enhance your education, and improve your overall odds of becoming successful. So with that being said, we're going to get ready to jump into this particular training. And in this final training tutorial series, we're going to cover DeFi blueprints. So the DeFi blueprint focuses on strategy setup. This is where structure turns into application. And we want to be able to teach you how to align your key levels, your prediction bands, your trend tracking, your scorecards into a clear, structured trading framework designed for real market conditions. Now, you have to remember that results are always going to vary based on execution, market experience, market conditions, and so many other factors. But as we go through this training, you're going to be able to get step-by-step execution blueprints, entry validation and confluence stacking tips, reversal, trend, range, and breakout and reentry models, and then obviously clear strategy rules to follow. So let's jump into it and talk about mapping the market. So markets move through repeated structural phases, and the DeFi blueprints are designed to basically organize these phases into clear, teachable frameworks so you can identify the trading environment or the market environment before applying your DeFi entry model. And some of the frameworks that you're going to learn is you're going to be able to learn price reversals, trend continuations, trading in the range, structural breakouts, candle validation techniques, and obviously additional tips. Now let's start off with DeFi reversal blueprints. Now remember, markets do not reverse randomly. Reversals form after price exhaustion, structural weakness, and failed continuation. So this blueprint is going to focus on identifying when the momentum is shifting and structure begins to build in the opposite direction. The objective here is to be able to recognize the reversal, like the exhaustion early before the expansion develops, meaning you want to be able to recognize the reversal before the market starts running away on you. So let's talk about a multi-session reversal. So about this blueprint. This is a multi-session reversal which can form after an extended trend where momentum kind of weakens across several sessions before the price begins to shift and begins to building structure in the opposite direction. So as you can see over here, we see the market trending up, we see the market pulling back, we see the market trending up, and we're basically going into our highest high, right? So this is the peak of this trend, the peak of this prior trend before this market started to turn around, okay? So the condition of the market is that we want to be able to look for extended trends that have completed multiple waves, meaning we've seen multiple waves and multiple market pushes to the upside or potentially the downside. And we want to be able to identify that final high or low right when the market started to lose the momentum. Now from here, right, once we've identified that higher high and we start to see that market starting to break down, we now want to start to focus on the structure. So we want to be able to identify macro reversal structures. These reversal structures can be M's and W patterns, head and shoulder patterns, or Quasimodo patterns, which basically can give you and show you a clear break of the prior swing highs and the swing lows, showing you that the market is beginning to shift and change the direction. What do I mean? I mean that this example here is a Quasimodo. This is one of my favorite reversal patterns. This is where we've identified the highest high. That's the very first thing. And then as that market starts to break down, we want to be able to see a break of the prior swing points, right? So that prior swing low, that new swing low, we're seeing a break below that. And then we're now seeing that market getting ready and pulling back to one of the previous key levels and one of the previous swing points. And that's where step 3, which is confluence, that kicks in. So for confluence, you want to basically identify before the market gets here, you want to be able to identify your reversal point by lining up your key level, lining up your valid price action, okay? Lining up your Quasimodo pattern or your reversal pattern, making sure that you're in the band. And when everything is all lined up and sitting right in that area, that's where you're potentially looking for a DeFi idea to then trigger to the downside. Now, whenever you're doing these multi-session, which are like these multi-day, large trend reversals, this works good with, large band settings, as it'll kind of show you these big price deviations and these big pushes and these big pulls. Okay, so I highly suggest that for those of you that are new to trading, do your researches on M's and W's, head and shoulders, Quasimodo reversal patterns. Learn how to be able to identify these patterns in the market, and then you can use these with DeFi, right? Then you have something called a single session reversal. So a single session reversal, very simple. You're looking for a double top, a head and shoulder, Quasimodo, same thing, but instead of looking for a macro move, which is like a really large move, you're just looking for a minor move, right? You're looking for a single session. So New York session, Tokyo session, Asian session, 5 minute, 1 minute, 15 minute, you're looking for a small condensed, reversal setup happening in one particular session. This is a session reversal. So as an example, right, condition, you want to look for an aggressive move, right? So you see here, you have a very aggressive move, just kind of pushing deep into these bands. And then as it pushes into the band and as it pushes into the key level, what are you looking for? You're looking for your structure. What is your structure? Wick rejection, double bottom formation, right? Engulfing candles. So you see here, this formed a double bottom, right? This formed a W pattern, gave us 2 wicks on the bottom side, respected and held our validated key level and our band. And in addition to that, we also had, as this market started to move up, we had a nice fractal break and it broke that W pattern, right? Gave us a nice little breakout over there, okay? And then that gave us the confluence. The confluence was we had the fractal break, we had the validated key level, we had the band touch, we had everything all in one shot, broke out, pulled back, filled out that FVG, and took off like a rocket in this market example. Okay, this is a single session reversal. Now, the next blueprint is known as the trend blueprints, right? Because again, strong trends, they do move in phases. They impulse, they have a very strong wave, they pull back, and then they have a continuation. So this is what happens. So these blueprints are going to be designed to basically focus on identifying structured pullback within established trends to basically position yourself with momentum as the trend continues. So again, the goal here is to work with the directional strength, the trend, rather than against it. So the first one is something called, the first blueprint is trading with the trend. And this is a market structure trend. This is built on a pure legalistic market structure trend. Now, this blueprint is all about identifying a market structure continuation. So how do you identify a market structure continuation? Well, these red dots here are going to basically show you the higher highs and the higher lows. So you can see here, in order for a downtrend to form, you need to identify the condition, right? So the condition, identify a clear structural trend formation, forming either higher highs or higher lows, depending if you're looking for a bullish or bearish sequence, and it cannot be broken. So as an example, we had higher high, higher low, higher high, higher low, high. We had a high, lower high, higher, low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Pardon me, I got a little tongue twisted for a moment. And then we see the market pulling back. So we can see here that this market is forming a downtrend. The lows are being constantly broken in the sequence. It's making a continuous series of lower lows and lower highs. That is that downtrending sequence. Now, two, for the structure, is you're looking for every time a low gets broken, you're basically waiting for the market to pull back. So as the low gets hit, low gets broken, you're waiting for the pullback, right? Low gets broken, you're waiting for the pullback. Low gets broken, you're waiting for the pullback. So that's the structure of the markets, okay? Now the confluence is simply marking your POI, your key level, your previous highs, and just looking for an overall market structure continuation to the downside. This is a market structure trend. If you're having difficulties understanding this, please revert back to the Academy and to any boot camps, which will teach you about how to identify a proper structure. Now, two, we have something called an order block continuation. So these are for my more experienced traders, the people that are looking for more so of a quote unquote liquidity grab, optimized, discounted pullback before the market continues in a direction. So the blueprint is very simple. You just want to identify an established trend reversal. So if the market is trading down, you want to make sure that you identify a change of character, or the market first breaking in the opposite direction of the trend, and then establishing a new high, and then breaking that new high. So you want to see a choke followed by a break of structure. And when that happens, you're now looking for the market to now pull back into your order block. And you now just want to make sure that your order block and your validated key level, your bands, are all in alignment. That's what's going to now give you the confluence to say, hey, might be a good discounted range in this example for that market to continue to push higher. Now, the next trending blueprint is the most simple one, which is simply a moving average continuation. And this is basically trading with the moving averages. Okay, so if you're on the newer side, this is extremely helpful. Now, simply toggle your moving averages on as you learned in your DeFi configuration training. And what you're looking for is you're looking for your long-term moving average to be above your other moving averages, okay? And then you're looking for your two two midterm moving averages to be in order. So as an example, these moving averages are 34, 55, and 255. So in this example over here, we can see that the 34 and the 55 is here, and we can see over here, right? So the 34 is below the 55. And you see how the market continues to pull back and continues to pull back, but it's showing strong trend strength, strong trend direction, because the 34 is under the 55. So as long as the 34 is under the 55 and the 34 under the 55 while under the 255, you now have a proper trending market based on the moving averages. So all you're looking for is for the market to pull back to these moving averages and give you a moving average crossover. So if it pulls back, touches a validated key level, touches your Bollinger Band, and rejects from either your 233 or crosses under your 34 and 55 at the same time, that will give you a nice confirmation, okay? And that right there is essentially your confluence to continue to trade with the trend. Now, we have range blueprints. So not all the time, the markets are not always reversing. The markets are not always trending. Sometimes the markets begin to range, and that's where they start to move sideways. And this is where you're having price start to potentially rotate and either consolidate and continue or potentially accumulate and reverse. So the objective here in this blueprint is to be able to identify when the market is consolidating and learn how to trade the range. So we have a single blueprint, and we call this the range rejection. So all you're looking for over here is, I actually just realized this is not edited either, but what you're looking for here is you're looking for a range. So to identify a range, you want to basically look for a key level and look for an extended period of time where the market has touched this key level and touched the band. So you see here, we had the first key level touch and the band touch, and the market came back and rejected from the key level and the band, came back, rejected from the key level and the band, and now the market came back again into the key level and into the band. But this time around, the market now gave you a strong DeFi candle and a strong DeFi confirmation, 2-star stack, and then the market ended up, trading upwards. So the most important thing is that whenever you're within a range, stay away from the middle of the range. Always look for the proximity. Always look for the highest point of the range or the lowest point of the range, okay? Those are going to be the best places, because what happens is if the market respects this range, then you're going to see a nice big push to the upside. If it doesn't respect the range, then it's going to break out. But you don't want to be in the middle of the range where you're going to start to have the market float up and down and up and down. And, you kind of want to pick a direction and commit to it, right? So that's why we want to trade the range extremes. So very, very simple. And again, keep these on the higher bands. So keep the band settings on a higher length so you can really get these expanded moves, okay? And now going into the final blueprint, which is probably the easiest blueprint of all to identify, is the breakout blueprints. Now, think about it like this: expansion, compression, right? The market's gonna move. It's gonna pick a direction. That direction is gonna be the expansion. Okay. So we want to help you identify breakout environments when price is building up pressure around a particular structure level before releasing into momentum and moving from that zone. So this blueprint is going to focus on identifying clean structural breaks and volatility expansions. So the objective again here is not to recognize when the market is shifting, okay, shifting like a large direction. The objective is to recognize when the market is shifting from compression to expansion in a very set range. Let's take a look. Let's talk about trend line breakout. So trend lines are very, very simple, okay? You simply look for the market to trend. You take 2 points, okay? The first point is the origin. The second point, now the second, the third point, so on, now starts to establish the trend. So for a trend breakout, what you're looking for is you're looking for an actual trend line crossover, okay? And a trend line breakout. So you can see here in this example, we had 3 touches, 1, 2, 3, created the trend, broke out a little bit, but we didn't have a DeFi idea, pulled back up, touched the band, touched the key level, and then crossed over and broke out from the trend line again, giving us that trend line breakout. Very, very simple. Draw a trend line, make sure price touches the band, the key level, breaks the trend line, and that is a trend line breakout. Now the second one is known as a counter trend breakout. So it happens in a smaller interval. So let's say the market is trending upwards. And in this example, the market is technically trending upwards, right? You had a low, you had a high, you had a higher low, you had a higher high. So this market is definitely in an uptrend. Now, while the market's in an uptrend, look at how it started to kind of like compress and kind of created this range. Remember when we talked about always look for the extreme proximity in the ranges, never the middle, either the high or the low, and commit to a direction. So look at here. So this market's actually legally trending upwards. Okay, it's also following a moving average. Okay, the market started to compress, but look what happens here. As this market starts to trade back down into the key level, validated key level, band, counter trend line, and we had a nice clean break right out of the counter trend line, giving you a +4 with a golden candle. And this is a nice counter trend breakout, and that momentum moved to the upside. You can find counter trend breaks all over the market. This is very frequently occurring, but just make sure that whenever you are doing a counter trend break, it's better to do a counter trend break in the direction of the overall trend. So if the overall trend is bullish, wait for a counter trend, and then for the breakout of the counter trend to trade back in the direction of the trend. Okay. Now 3, we have something called a trend trap breakout. So in a trend trap breakout, this is where the market is, and these are really fun. So this is when the market is now trending upwards. As you see, we have a legally upward trend, okay? And then you could also see we have a trend line. So sometimes what will happen in the market is if you're trading with trend lines, I have the first point here, I had the second point here, we had a little trend line fake out, fake breakout and broke back in, okay? So we have a nice trend line here. And then you'll see as the market started to come back to the trend line, it started to compress in the range, right? So we now have a validated key level. So it's the market is now testing that validated key level. It's now testing the trend line at the same time, testing the prediction band, and then breaks out of the counter trend, and boom, the market goes up. This is a trend trap breakout. So it is, again, testing the key level, testing the trend line, the band, and then breaks the counter trend line in the direction of the trend, and bingo. And then now you have a general for the last one is the price trap breakout. So these are for all my basically break and retest traders. And this does work on lower band settings, 55, 34, 25, 13. This does work on smaller band settings because you have to be able to see that rapid pullback to be able to get that continuation. So the price trap breakout is very, very simple. You simply want to box up two key levels and then just make sure that the price is consolidating between these key levels, right? We have some rejection here. You have some rejection here, 2 points to the high, rejection here, 2 points to the low. And then here you can see that the market broke out above, retested. Look at what it retested the key level, became a valid key level, right? Because it's retesting. So it's breaking and retesting while also testing the bands. Okay. If you want to use your imagination, there's a small counter trend here, broke out that counter trend, okay, gave you a scorecard, and bingo, the market resumed in the direction of the trend. So that's a price trap breakout. So I highly, highly, highly recommend that you really identify trend trap breakouts, counter trend breakouts, trend trap breakouts, and price trap breakouts in the direction of the trending market. This will help you guys a great, 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 great deal using price action with DeFi. Now, for the final point is candle confirmations. And we kind of talked about this. You've seen this, but I want you to know this is that when it comes to candle validations, okay, and it comes to strategies and blueprints, the market has all types of conditions. But overall, the market is doing the same thing. The market is trending, maybe giving you 3-4 strong pushes in a big trend. Then it starts to consolidate, accumulate, begins to reverse, and then it reverses, and then it starts to trend down. And so the market is always, again, in this phase of impulse and pullback, and impulse and pullback, and impulse and pullback. And the market is always doing this again and again and again. And these pullbacks, sometimes instead of being counter trends, sometimes they're kind of like diagonal, like this, right? They're consolidations. But it's the same series. It's the same thing, impulse and pullback, or impulse and consolidation and impulse. You just have to kind of detect the overall direction. Is the overall direction up, or is the overall direction down? And if you're not good at detecting the overall direction, that's what the long-term EMA is there for you. So we try to make this as simple as possible for you, okay, to be able to detect these conditions. So when the market is going through these phases and these conditions and all these different things, you're going to start to see a commonality of candle validation conditions and techniques that are repeating. And this is something that I would strongly suggest that you guys learn, okay? Is that for every single DeFi idea, always look for a level retest. Okay, look for a level retest. Look where it broke and is holding a level. It's retesting a valid level. 2, for your entry candle, try to always identify a fractal breakout. That's when the market, is giving these, small downtrends, and then you're kind of getting a nice break in the opposite direction of that fractal breakout. Okay, because that's a really strong sign based on price action. Okay. Try to always identify counter trend breakouts, okay? And you don't need to use the 2 highest points. Try to use the first two points where it was the peak, the market came down, pulled back, and then you had the first rejection. That will kind of give you that first counter trend line. Everything else here is just fake outs, okay? Try to always look for that counter trend breakout, okay? Have a lookout for wick rejection and engulfing candles, right? Whenever the market's going to get ready to leave a zone, it leaves clues. So if you start to see rejection, that represents price exhaustion. So if you start to see a lot of wicks getting thrown at the bottom before it moves up, that's great. You start to see a lot of wicks get thrown at the top before it moves down, that is great, right? Represents price exhaustion. It means that the market couldn't hold that push. So we might see the market turn around. And as you're using, engulfing candles and 3-line strikes and morning stars and evening stars, these candle confirmations also come in handy. And then last but not least, the trend line, try to use a trend line or an EMA additional bounce or supports, right? These things will kind of keep you in the right direction of the trade as possibly as right as the market will allow us to be able to know. So again, key levels, bounces, EMA bounces, trend line bounces, counter trend breakouts, fractal breakouts, wicks and engulfing candles. Just kind of put this all together in the direction of the trend. And I think you will find that DeFi can be a very friendly tool to help you, trade your price action in the market. All righty. So with that being said, we're going to get ready to wrap this up. Again, guys, I want to thank you so much for being a part of this 4-part training series. I hope you guys have learned a ton from these videos. Remember to trade wisely, trade responsibly, okay? Respect the markets and know that profits are not guaranteed, that DeFi is the results will vary based on market conditions and based on your market experience, okay? So study hard, learn well, and become as profitable as you can be. My name is Manny Quinones. Thank you for being a part of this 4-part tutorial, and we'll see you next time.
Wow. I think that was really, really good. I definitely think that we should watch this one again. Yeah, we'll watch this one again. I think that was really good. And if you picked up on some of the things that he was pointing out, it was kind of some of the ways that, where I was talking about the candles, he pointed that out. Yeah, but anyway, that was good, right? Very, very, very good. Okay, so remember, don't jump before you can walk, or run before you can walk, whatever it might be. And just keep plugging into these study group sessions, and you will become very, 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 very good at trading, right? Because we don't become good at trading because we just go to the market and think that we can trade. No, we get good because we plug in to all the sessions, right? The trading sessions. The more we trade together, the more you're gonna learn, the more it's gonna make sense. So we're definitely gonna come and watch that one again. We will go through the DeFi configurations. I guess there's gonna be some stuff in there that we don't, or we haven't yet probably seen, so it might be worth going through it, but definitely want to watch this one again. But I think that was very, very, very good. Yeah. So, guys, has today's session helped? Definitely not the same numbers that we started with. I don't know why people come on and then just jump off. Like, is it because they thought it was a trading session? Like, honestly, I don't understand. So let me stop the recording. Yeah, no, like I think it's incredible, you know?